Hello, you're watching News.Markets Business Book Club. We've had our noses stuck in 7 successful stock market strategies, a practical guide to investing in the FTSE 100 and 250 with 7 simple, tried and tested strategies that anyone can follow. Well, creator of Share Maestro's share valuation system and the book's author, Glenn Martin, joins me now. Thanks for coming in.
It's a pleasure.
Now, in your book, you say there are 3 main options for investors in UK equities: individual UK shares, commercial share funds and index tracker funds. And that last one is your favourite, but you need to be quite good at building spreadsheets.
Well, the book includes very simple instructions for using and building the spreadsheet. So it's not that difficult. If you really don't want to do that, you can use the Share Maestro software, which gives those valuations automatically. But the fundamental basis of the success of the strategies in the book is twofold. There's 2 systems. One is the valuation system, which creates the intrinsic value of the FTSE 100, so you can compare it with the market price. And that then enables you to get signals to go in and out of the market. And every single buy signal with that system has delivered a profit on the sell signal since 1984. Also, the average capital growth when you're in the market is double the average capital growth over the whole invested period. Again, this is tested back since 1984.
So you haven't retrofitted it here, but you've looked back and in time, and I think you've said that one of your strategies, if you'd started out with £1,000, would have grown to £12 million by now. Yeah,
that is with using the in and out market signals for FTSE 100 spread bets, which are highly risky in the short term, but these strategies I've got are for long-term investment, so they're minimum 5 years. But if you invest with that perspective, you can get those returns. And if you want a lower risk strategy, then you can just do a straight buy and hold strategy for the FTSE 100 or FTSE 250. But the crucial thing there is to do a valuation first, because if you'd invested at the end of 1999 in the FTSE 100, it would have taken you 7 years to recover the original value of your investment, including reinvested dividends. Whereas if you'd done a valuation first, it would have shown you that the index was only worth just over half what it was priced at. So that's where the comfort of that strategy comes in.
It sounds quite labour intensive, having to do all of this homework first. Is that the case?
No. It would take a maximum of 5 or 10 minutes a week. Obviously, the buy and hold strategy is not intensive at all. You do a valuation once, and that's it. You just buy, you sit on the investment and watch it grow. For the in and out strategy with the market timing, you would just do a weekly check, which would take you about 5 or 10 minutes maximum.
So it's quite low maintenance. And I
Very
suppose for the novice investor, there's something there, but even going through to something more sophisticated, because strategy number 5, that one seems a lot more complicated. But what about exit strategy? Because it's one thing about giving people advice and strategies to get into the markets.
Yeah.
What about getting out?
Well, the other system, which is in the book, is what I call a market momentum system. Every so often the market gets gripped by panic, irrespective of valuations, because we're all animals at the underneath it and we get swayed by emotions. So this system indicates at what stage you should get out of the market in a free fall situation. And if you'd used that system in the recent credit crunch crash, you would have saved 1,000 points of the crash. So you got protection there. But also you got protection with the valuation system, because as I've said with the end of 99, you would not have been invested when that crash happens after 1999. Again, the value of the index roughly halved then, but you wouldn't have been in the market in the first place because of the valuation system. So it's belt and braces, and you're covered all ways around, really.
So it's a way of maximising your returns but minimising your risks.
Yeah, maximising your long-term returns, and the long-term returns vary from 9% to, as I say, 37% with that spread bet strategy.
And for only a few minutes a week. Glenn Martin, thanks very much. Glenn Martin, the author of 7 successful stock market strategies.